All right, welcome back to another video. My name is Ian Major. I'm an entrepreneur, investor, and all-around raging capitalist. And in today's video, I'm bringing you your March Bitcoin Digest, where we cover kind of the lay of the land, major themes across adoption, technology, and more. For those of you who tuned in to the February edition of this, you'll know that this video and this series really is not intended to make any sort of near-term price predictions or tell you how to day trade Bitcoin, right? Which I believe to be a fool's errand. Rather, it's to help you build your understanding of the different dynamics of the market and help prevent panic when, for example, over the last couple of weeks, we've seen Bitcoin sell off a bit. And so as part of today's video, I'll kind of go through some reasons of why that actually occurred. And so again, it's more to enrich your understanding of the whole space so that you don't panic sell and you remain calm and hodl and stack, and everything will be good and happy. If you sold, I'm sorry, but hopefully you will develop more strength in those hands as we go along. And so, as always, there's a lot to cover today. So without further ado, let's go ahead and jump in. Now, my comments around pricing notwithstanding, I still think it's often important to understand the dynamics of what we see. And by no means is this a claim to know all the intricacies of why prices go up and down. No one knows that, right? That's kind of the whole point of markets. But there are some kind of signposts and big picture signals that can help us put the pieces together. And so as we've seen over the last couple of weeks, Bitcoin pulled back by about 25%, which for a lot of folks is just kind of a nauseating amount. But again, just keep the bigger picture in mind. When you zoom out even just a month, you'll see that Bitcoin's still up 30 plus percent or whatever it is. And so, but still, I think it's important to build that understanding so that you're not kind of panicking in the moment. And so let's kind of jump into recent price action. And as we can see here from Ki Young Ju, it's actually, I think, a really, really good outline of the major participants in the market today, right? You've got institutional investors, primarily in the US. And so you can see he's kind of rated each of these components in terms of buy or sell kind of pressure. And it's no surprise that the institutions are coming in. We'll go into that as another theme later in this video. But you look at the kind of Coinbase outflow, so the number of coins leaving exchanges like Coinbase, that continues to be really, really strong, which means that folks are just locking their Bitcoin away. And so that's hugely bullish. The premium that's on Coinbase in terms of buying is also very bullish. You look at kind of whales, so wallet addresses that have more than X number of coins. Oftentimes that X is 1,000, but it can be different. And so here you can see reserves as well as kind of stable coin inflows. And again, stable coins are just what big traders often use to park funds in a digitally native kind of coin so that they can quickly move into crypto assets. But the real aha here is around miners. And so this is interesting, and you can see his headline at the top, it's a whale war, and who still has the real power. So this is very, very interesting. Basically, miners have been selling over the last, selling in a big way over the last couple weeks in particular. And if we zoom into this chart here, we can see that really clearly. And so what we're looking at is over time, so this goes back just a couple weeks till essentially the end of Feb. And you can see that plotted against the price. And we see this huge outflow. So these red bars represent the amount of Bitcoin being transferred out of kind of miner wallets. and you see this massive outflow at about Feb 21 or 2 maybe, and lo and behold, you see this kind of pressure downwards. You see some more big outflows that occur over the coming couple of days. Price comes back a little bit. You have another big dump, and so this shows pretty clearly that the big actor in all of this are miners selling their Bitcoin. Now, what we can see in this next view from Glassnode is that that dynamic is now changing. And so while it was the case that really for if you go even further back, the net position, so this is these bars are showing the net position change for miners as we go kind of day to day, week to week. And you can see that, really even since late December, that net position change was decreasing. And anytime we're talking about markets, it's always the kind of marginal dynamic that moves prices. And so you can see that as these red bars get longer, that was starting to apply pressure, to the price. And you can see as the bars get shorter or kind of less negative here, the price begins to kind of go back up, and then vice versa for this more recent time frame. And so again, all of this is just in a pretty good way that shows the impact that miners have on the market still. And that's important to acknowledge. Now, miners selling Bitcoin, is that anything to be concerned about? Absolutely not. This is part of their business, right? As they earn Bitcoin for the services that they render to the network, they keep that in treasury, and then they'll sell that in order to pay expenses and things like that. Now, there's a very interesting dynamic that I think we'll see in the not too distant future, which is articulated here by our favorite Giga Chad, Mikey Taylor. And you can see Bob's response here. And so Michael's basically saying, what happens when all the publicly traded Bitcoin miners stop selling Bitcoin and instead basically either issue equity or borrow against the Bitcoin as collateral? And Bob says, I own 3 mining companies, and that is already our path. Properly capitalized, we don't need to sell and can borrow against our Bitcoin if there are ever issues. And so that is going to be, a game-changing mechanic. When that ultimately happens in scale, who knows? It's probably still a little while, especially given where the kind of mining power is distributed globally. But as financial institutions provide more services, such as being able to borrow against your Bitcoin as collateral, this dynamic of miners having to sell in order to cover their everyday expenses could become less of a factor. And so that's something very interesting to watch. But that helps explain the recent price action. And so with that, let's move on to a totally different topic. And that's actually around the kind of Bitcoin technology itself and some of the big upgrades that are currently being finalized. So let's dive a little bit into Taproot, which is the kind of latest and greatest exciting set of enhancements to the Bitcoin protocol. And so it's important for all of us to recognize and acknowledge that Bitcoin is a living, breathing thing. Some of its most fundamental parameters, such as the 21 million hard cap, those are things that are essentially immutable at this point. However, there's development constantly happening, and it's one of the richest kind of pools of activity in terms of development in the world of cryptocurrency today is around Bitcoin Core, which is super exciting. And so what is Taproot? Taproot is essentially a set of enhancements that expand and enrich Bitcoin's smart contract functionality and also increase privacy around it. And yes, I said smart contracts, right? A lot of people think, Ethereum and all this other stuff when we say smart contracts, but a really simple example is something like a time lock, which is essentially a rule that says, hey, these coins cannot be spent until a certain amount of time has passed, etc. And so what happens today and historically is that these rules, and by the way, there are rules or what are called spending conditions on kind of normal transactions as well. What happens is that these rules or spending conditions are ultimately revealed or can be revealed to other participants. And this has some downsides, right? For one, if these spending conditions are highly complex, that does impact kind of data and data size and processing, kind of time of the network. And it also can erode privacy. For example, let's think about like a multi-signature, protocol. And multi-signature, for those not familiar, is essentially where I can combine multiple keys in order to apply a digital signature and unlock funds or whatever the case may be. And so what basically happens now is those multi-sig transactions are distinguishable from non-multi-sig transactions. And you may think, well, what's the big deal? But it can reveal information about the type of wallets that you're using. And just keep in mind that there are entire firms, chain surveillance firms that are looking to kind of help governments, track things on the blockchain, which is anonymous, but also very transparent in nature. And so ultimately what Taproot is doing is it's combining what are called Schnorr signatures, which are essentially what many believe are a superior version of the digital signature algorithm that the Bitcoin protocol uses. And that will help with efficiency of processing as it relates to some of these kind of more complex transactions. It will also help with privacy. And so ultimately these enhancements are going to make multi-sig transactions indistinguishable from regular transactions. And that's a very good thing. This is also going to pave the way to a number of other enhancements. What many believe is a superior form of something called a coin join, which I've covered in prior videos briefly. But essentially coin joins are a way to kind of combine inputs from multiple participants into a single transaction, and the outputs make it a lot harder to know who kind of owns what coins. And so this is very good, again, for privacy purposes. And so something called a coin swap is being developed as a potential enhancement to that. And there's others as well. And so bottom line, if you care nothing about the sort of technology aspect, number one, you should, but number two, at least acknowledge that this is a living, breathing thing, and Taproot is going to bring a number of privacy and performance-related enhancements, particularly to the kind of smart contract or more complex set of transactions that are achievable on the Bitcoin network. It'll also pave the way for more privacy in Lightning transactions as well. All very good stuff. And so how is this being rolled out? It's estimated currently that the actual code itself will be deployed probably late March, maybe early April. But then there's a period of activation whereby miners and other participants on the network will signal their support or not for this kind of upgrade. And if a sufficient amount or percentage of participants agree that yes, this is a good thing by a certain date, then then that sort of becomes the new latest and kind of greatest protocol. And so I may do a further video in the future that just goes through those mechanics, because I think it's really, really interesting on how these enhancements are proposed by Bitcoin core developers and then ultimately voted on by participants in the network. Keep in mind, like, there is no Bitcoin corporation, right? Like, there is no CEO behind this. There is no kind of organization behind this. And that's really the beauty of a truly decentralized asset that is Bitcoin. So we'll leave that there for now. Again, I'll probably do future videos on that. But bottom line, very exciting developments with Taproot, and that'll be rolling out and being activated over the coming months. Let's go ahead and switch gears again and go into some of the continued institutional activity that we've seen over the last few weeks. All right, in terms of kind of institutional adoption, I really probably shouldn't even have to cover this as a part of these monthly digests. It's almost a given fact at this point. In February's edition, we talked through the MicroStrategy corporate event, so Bitcoin for Corporations, that Michael Saylor and his team put on, which was attended by thousands of organizations. And so, we continue to see some big kind of articles here. Square continuing to buy more Bitcoin, a casual 170 million. Goldman restarted their cryptocurrency desk, which is very interesting. They're also, as you can see, exploring the potential for a ETF. If you search Bitcoin ETF, you'll see just numerous articles, different jurisdictions, different organizations kind of all around the world considering and seeking approval from their respective regulators to make this happen. The world's very first Bitcoin ETF, which was launched in Canada very recently, saw just eye-watering performance in its first inflows in its first couple days. And so you can see the U.S., Australia, many other geographies are going to see this. It's just a matter of time. And this is nice. This is a slightly more direct way to own, quote unquote, own Bitcoin versus something like Grayscale Trust, which is kind of even more indirect. But again, keep in mind, either of those options, not your keys, not your coins. And so you're really just getting exposure to Bitcoin. You're not owning the underlying asset. Who knows how some of these services will evolve in the future. I've seen rumors, for example, that you can obviously buy Bitcoin on exchanges like Robinhood, but that's still, for all intents and purposes, paper Bitcoin, given that you can't actually withdraw it. But I've seen Robinhood come out and say that they intend to build that functionality. So who knows how the whole space will change. Our, again, favorite GigaChad over at MicroStrategy continues to slap more Bitcoin on its balance sheet, just a cool 1 billion more. And so the writing's just sort of on the wall. I stumbled across this very interesting article as well. So Pakistan is actually producing more energy than they need, but are facing an issue, right? Because there's no way to distribute that extra energy. And so it's all just going to waste. And this comes back to the whole FUD, fear, uncertainty, doubt around, Bitcoin and, it's going to burn the planet and we're going to boil the oceans and all this, which is, so far from the truth. Check out my earlier video on kind of debunking some of that FUD. There's a lot of great pieces out there that do the same, but this is just a terrific example of, they're literally overproducing energy. It's going to complete waste. Bitcoin can sop that up and put it to an extremely useful use. So anyway, that's a small selection of articles. So point is, bottom line, we're continuing to see strong institutional adoption moving in, confirming everything that we've seen over the last few weeks and months. As a final chapter in today's monthly digest, let's last but not least go into the laser eyes movement. A bit of fun one to end the video on laser eyes. So people have probably seen this on Twitter and elsewhere, and may be asking, what in the heck are these? And so essentially this is just a meme that's like flown around so fast and blown up, of laser eyes till 100K. So basically everyone has put laser eyes on their photos to in support of the rally that will take us to 100K. And the earliest evidence I could find of this, the earliest mention I could find of this on Twitter, was the following from Bitcoin Husky. So props to you, Bitcoin Husky. I saw others like Alpha Pero and others kind of pushing this, shortly thereafter. And what's hilarious is this quickly just spread across the entire Bitcoin space, all the way to our favorite Senator Cynthia Lummis, who threw up some laser eyes for a day. And so it's hilarious to see. I follow a few things as closely as Bitcoin, but I've really just never seen a meme take off like that over span of days. You have hundreds of thousands of people with laser eyes. And so again, just Bitcoin, the protocol is so kind of immaculate, but when you then also layer on the community that's built around it, man, if you are bearish right now, or if you're short Bitcoin, or if you're still a no coiner on the sidelines, I can't help you. I don't know what you're doing. And so it's awesome to see. You love to see it. So with all of that, we'll go ahead and leave this video for now. What did we cover? Just as a quick recap, we saw that mining activity, and specifically miners selling Bitcoin, was really a big driver of the price correction we saw over the last couple weeks. This is not something to be alarmed by. This is a natural process by which miners run their business and kind of pay their expenses. There are some rumors of some funny business of miners partnering with short sellers, and short sellers going in, and then miners can dump a bunch of Bitcoin on the market. And there's probably some of those shenanigans happening, but ultimately over time, miners aren't going to want to sell their Bitcoin either. And so as more scaffolding comes around the Bitcoin ecosystem, more people, individuals, institutions, miners, mining pools, etc., are going to be able to borrow against their Bitcoin as collateral, and then you just don't have to sell your Bitcoin anymore. And so we'll see that be an interesting dynamic in the coming months and years. We also took a look at Taproot, so some of the latest exciting technology underneath the hood of Bitcoin. We took a quick look at some of the institutional activity that we're continuing to see, and then we capped things off with laser eyes. If you don't have laser eyes, what are you really doing with your life? But I digress. In any case, guys, I hope you enjoyed this video. I hope you found it informative. If you did, be sure to give this a like, subscribe. There's gonna be lots more content, weekly videos covering all manner of topics, Bitcoin, from privacy and security to how-tos to videos like this where I just kind of go through the lay of the land. But again, excited to be on this journey with you all. Leave a comment. Let me know what kind of topics you'd like to see in future videos. And with that, we'll go ahead and leave it there. As a reminder, every sat always counts. And until next time, I'll see you then.